Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. If you had a chance to watch my midweek report, you would have heard me say that I thought we would see a bounce towards the end of the week and up towards these moving averages here. Let me give you a zoom in view of that. You can see we have a beautiful green candle on slightly higher volume. Down below, we have a buy signal on the CCI. The stochastic is hinging, not quite at a buy signal yet, but I do believe next week, Monday and Tuesday especially, I think we could rally up towards that moving average. And it's going to form what I believe is a new ABCD pattern, which will eventually get us down to this low here at 425.51. We take this 1 week at a time. If you're a regular follower, you'll know that I use a 7-point trading checklist to pick my target numbers, and I follow the candles, I follow the volume, I look at the wide divergences from the moving average, I look at the oscillators down below, the stochastic and the CCI, and I also pay very close attention to gaps. So I do believe that this gap is going to fill right there at 439.97. And then I think we could go a little bit higher than that, which will bring us to that moving average because the moving average is still moving lower. So my upside target for DIA for next week is not a big move, but it's 440.82. Looking at IWM, had a rough week for sure. You look down below here, we have red, red, red all the way down. That's the first green candle after that long stretch of red. We call that a stale red light. Now that it's broken with that green, you can see that we have hit my downside target. I mentioned that on Wednesday at 214.59. Now I think we're going up, and I'm not going all the way to that moving average because I think we're going to hit some resistance here at this roll reversal level right there. So my upside target on IWM is going to be 219.08. Again, if you've been following me long enough, you'll know that my forecast lines go to the penny. Once in a while, I'll round up or down if it's a very high-priced stock like Bookings or something else like that. But most of the time, I don't waste time adjusting my charts. I just keep it right there to the penny. So IWM is 219.08. Looking at the Qs, which is the tech sector, basically had a big sell-off this week. Again, history is repeating itself where we had this big sell-off, and I said that we would start to see some big pressure on the downside. Took a little while, but we did hit that downside target right down there on the Qs at 510.16. Again, the big, long, stale red light is now broken with a green candle. It is lower volume. I'm going to look for a higher volume candle probably on Monday. Look down below. You got the stochastic starting to move up. CCI is pivoting up, not quite at a buy signal, but I think you'll get that maybe on Monday or Tuesday. So I'm going right back up on the Qs right there. I'll stop it at 514.81. Again, 514.81. For those option traders out there, that date in the box does not tell us that the price will hit the target on that date. I'm just giving the option traders a time frame more or less to help them pick expiration dates so they don't buy too short term and wind up having those options expire worthless before their targets hit. So again, upside target on the Qs is 514.81. Going to SPY, you're going to see the same thing pretty much. Had the big sell-off. We hit that target beautifully, that red dotted line right there of 590.63. So we hit it on IWM, hit on Qs, hit on SPY. We're still waiting for DIA. But this is an interesting candle because that is a bullish harami. That's when you have a smaller green candle that falls within the body of the previous day's red candle. And so that is very bullish 80% of the time. Now, see that low right there? That's where my next target is going to be. That is a roll reversal. I'm going up to 598.22. That low drawn to the right is going to bring us very close to that target right there, where that will now be resistance. The concept behind roll reversal is pretty simple. Once support is broken, which you see it broke here, it then turns to resistance. And after we hit that resistance target, I do think we'll start heading back lower. But like I said before, we take it week to week. So to reiterate, upside target on SPY is 598.22. Looking at the VIX, we have a red candle again after this long stretch of green. It's not quite a bearish harami, but that long shadow on top tells us that the sellers came in. I do believe that the downside pressure will continue into Monday and Tuesday. So I do believe the VIX is going to drop towards that moving average right there. And then the moving average is obviously moving up. So let me get my target here for you in the line, diagonal line right there. I'm going to put the VIX down to 1851 on the VIX. So if you're trading VXX or UVXY, you could buy puts perhaps, maybe short it, but I would say be very conservative with this, because once my target hits and this moving average is starting to get more vertical each and every week, then that moving average is going to act as support. And the last thing you want to be is short the VIX when all of a sudden we have an explosive move in volatility. So that's VIX. A lot of today's positive action came on the heels of the Core PCE. Now, we did have personal income month over month did increase above what the expected 0.4% was. But I'm not really that optimistic about that personal spending dropping right there as more of a bullish indicator, because that could bring us closer and closer to a recession. Remember, a recession is nothing more than when consumers stop buying, right? They just go on strike more or less. And so I think that's going to work out to be a negative effect on the markets. And in fact, again, if you're using my 7-point trading checklist, which, by the way, if you'd like a copy of that, you could just email us at Sticky Trades. The email is at the bottom of the webpage. Then we will send that PDF document to you. But this is why we have such a high percentage of hit rate, is because I go through each one of these signals and I line them up. If there's a lot more bullish signals like we had today, then I'm going to carry that bullishness into next week. And the target hit rate is very high, especially with Bitcoin. I have a 90% hit rate on Bitcoin. And recently we had the 86,600 target has hit. I'm very public about this. So we had 9 out of the last 10 forecasts on Bitcoin have hit. I still have a downside target on Bitcoin of 63,140. If that one hits right there, then we are back up to 100% hit rate on the targets for Bitcoin. So stay tuned. There's a lot of action, especially for option traders. You could trade Bitcoin related stocks like Coinbase, Ethereum, Mara. There's lots of other stocks that you could throw some option spreads on and do very well. But here's some economic news. Serious delinquency rates have passed over the highs from 2008. And this uptrend here does not look like it's tiring out anytime soon. So that is a leading indicator. When people fall behind on mortgages, when they fall behind on car payments, that's taken as a big negative for the economy. And this one was a shocker. The Atlanta Fed is now projecting that Q1 GDP will be minus 1.5%, which is a contraction in the gross domestic product. Now that is leading us right into a recession, no doubt. And I have to say that that's pretty dramatic. That's more of what you would see leading up into possibly a depression. I don't want to throw that D word out just yet. That would be too premature. But it's very interesting how the Atlanta Fed is now dramatically adjusting, because last week they had plus 2.3 and 4 weeks ago it was up 3.9%, almost 4%. So this is something you want to pay very, very close attention to, folks, because don't get caught trying to buy the bounce and then holding on only to turn those winners into losers. We're having a great year so far. February was a great one with all of our spreads for the option traders. Our directional trades are doing extremely well for the option matrix members. And we have the equity analysis, which is strictly for equity traders. Folks, thank you so much for liking and sharing and commenting. That's getting our numbers to work with the algorithms, and we get put on the menu whenever you do that. You're doing us a great favor, and you're doing all of our viewers a great favor, because it helps them get to that video a little bit faster on Friday afternoons and Wednesday afternoons. So you have a great weekend, and I'll talk to you next time. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.